All right, I hope you've taken a chance to try the chapter 3, I call it the self-quiz, just to make sure you're on the right track, right? This is good review of chapter 2 when we talked about the different items in the accounting equation, as well as financial statements. What's new is the normal balance. So it's a good mixing of old concepts and new concepts. All right, the first one's done for you as an example. Service revenue. And again, hopefully you've tried this. If not, pause and try this on your own. That's the only way you'll get feedback to see if you really understand these concepts. All right, so assuming you've tried it on your own, revenue is equity and has a normal credit balance, and it shows up on the income statement. Accounts payable, that's a liability. Liabilities have normal credit balances and they appear on the balance sheet. Rent expense, that would be an equity item. All expenses have normal debit balance and are on the income statement. And common stock, equity, credit, and balance sheet. Remember, there's 2 line items under equity. So owner's equity is your common stock and your retained earnings, and both of those show up on the balance sheet. All right, cash is an asset, debit, balance sheet. Same for supplies. Supplies, before we use them, that's an asset. Advertising expense. Expenses are considered equity items. They decrease equity and appear on the income statement. Payable, that's a liability again, and liabilities are on the balance sheet. You hopefully remember that from chapter 2. Equipment, that's going to be an asset. All assets have normal debit balances and are on the balance sheet. This is a new one. This was in the reading. You had 2 new accounts this chapter. Prepaid insurance is one of them. So anytime you see the word prepaid insurance, prepaid rent, that's an asset. Think of it just like supplies. We're paying for something in advance of using it. We're buying supplies before we actually use them. We're buying equipment and we're going to use that equipment for 5, 7, 10 years, right? So we're buying it in advance. So that, like all assets, normal debit balance on the balance sheet. Accounts receivable, same. Interest revenue, that's an equity item. All revenue, normal credit balance on the income statement. Dividends, finally something that appears on the statement of retained earnings. A normal debit balance, and it is an equity item. Land, assets, debits, balance sheets. Unearned revenue, that was the other new account for you. Okay, so we can't call something revenue unless we've earned it. So the fact that it says unearned, we know it's not equity. And what's going to happen with unearned revenue, that basically think of it as like a customer deposit. The customer pays in advance. We haven't earned it yet. If they want it back, we have to pay it back. So that's why it's a liability. All liabilities have a credit balance and appear on the balance sheet. Hope you did well.